I told you about, the one that I said that if you don't take care of it within the next 12 months, will knock you out of business. Now I'm about to reveal that problem to you. Right? If you're an insurance agent just watching this video, then I want to go ahead and say this. I have been where you are right now, and I can tell you that it gets better. So I want you to go ahead and watch this video, because in the end of this video, I'm going to reveal the secrets of why insurance agents struggle, what are the common things that they struggle with, and I'm also going to reveal at the end of the video how you can avoid them. Okay, so stay tuned and make sure to watch the whole thing. Okay, so most common mistakes insurance agents make, let's see, is insurance agents make the mistake of trying to take the easy path. Okay, I cannot stress how much I've seen a lot of insurance agents try to take the easy path. Now I'm going to go ahead and cover where the easy path is towards as this video continues. So go ahead and stay tuned. So here's how they do that. Okay, most agents working with leads work with the most easiest leads to come by. Okay, which is final expense. Final expense is probably the most easiest leads to come by. Now, the average cost of final expense leads range anywhere from $15 to $45. The most common ways agents get these leads are, they either purchase leads from a lead vendor, or you basically go ahead and you generate the leads yourself. Okay, you generate the leads by launching a campaign on Facebook. Now, sometimes you see success, and sometimes you don't see success. But lead generation is the most common problem insurance agents face in the beginning. There is more to this. There's a reason why I'm saying in the beginning this is the most common mistake that insurance agents make. But there's another problem that occurs as a result of your lead generation and your lead purchase. Yes, that you heard that right. Lead generation is the most common problem, but lead generation leads to much, and lead purchases lead to a much deeper and sinister problem. So go ahead and keep watching. I'm going to go ahead and cover that in this video. Okay, so this will end up basically drowning you in debt. Okay, so basically it will drown you in debt. This problem will either drown you in debt or knock you out of the insurance industry within 12 months. I know you're probably like, dude, what is it? Stop giving me expense. Listen, I want you to understand something is, if this problem is not taken care of right now, you as an insurance agent, especially if you're a brand new insurance agent, and it's only a matter of time before, you just kiss your license goodbye. Okay. So now I'll reveal this problem in a bit. Okay. But first, let's tackle lead generation problem. Let's tackle first the first problem you have, which is getting leads. I'm not a doomsday kind of person. I'm not here trying to preach doomsday. I'm not here trying to get you all spooked. I'm not here trying to get you all freaked out. I want to go ahead and basically make sure that you get the best experience that you can in the insurance industry. And for me to be able to do that, I want to go ahead and tackle the first problem, which is getting the leads, right? And why not all leads are the same, okay? Not all leads are the same. If you truly want to succeed, you need to stop buying these leads, okay? There's a specific type of leads that you need to stop buying, and you need to start generating these leads. So here's the problem that if not taken care of, okay? Now I'm going to cover the leads that you should purchase and the leads that you should not purchase. But before I go ahead and talk about that, remember the problem I told you about? The one that I said that if you don't take care of it within the next 12 months, will knock you out of business. Now I'm about to reveal that problem to you right now, okay? Chargebacks. Chargebacks is the number one thing that wipes insurance agents out of insurance industry. Chargebacks. Listen, everyone's like, oh my God, Emmanuel, what are chargebacks? I'm going to go ahead and cover chargebacks right now in a bit, okay? Because of the way insurance payouts work is how chargebacks occur, okay? So now I want you to grab your pen and paper, and I want you to dive in with me as we cover what chargebacks are and how chargebacks are, if you don't take care of it, will wipe you out of the insurance industry, okay? So here's how insurance payouts, such as when you sell a policy, you get advanced a 9-month premium once the client makes a payment, all right? So here's an example, right? I want to go ahead and cover an example if my computer would load. But before I go ahead and cover that example, I want to go ahead and cover one thing. The way the payment work is you're like, okay, well, you're telling me if I sell $100 payment, I get an advance 9 month, the 9-month premium? Yes, you actually do 100% get advanced 9-month premium, okay? But how? How is that possible? It's called unearned commission, okay? It's called unearned commission. What does that mean? That means that you haven't earned a commission. Now, which means that you owe, which means that at some point in your commission lifespan or life cycle, there's a possibility that you owe that either a portion of the commission or the full commission back to the insurance company, okay? Here's an example. Martha signs up for a policy at $100 a month, okay? So Martha says, hey, listen, Joe, sign me up for a policy for $100 a month, right? You, the agent, are at 100% commission, which means if Martha pays $100, you get $100. You're like, whoa, how does that work? That all depends on what company you're with. Some companies, some insurance agencies have the agents at 25%, 50%. I personally, I'm not commenting on that. That's not the purpose of this video. Like I said, I am not making this video to recruit you as an insurance agent. I have no interest in that. I'm making this video to educate you as an insurance agent. Okay, understand? So the agent at 100% commission. Okay, so you get advanced the 9-month premium. Okay, remember we spoke about how the payouts work. You get advanced a 9-month premium times 100. Okay, so which is she's paying $100, so you get advanced 9 months times 100. And that's basically what I meant to write. Okay, so what that means is you get advanced $900 once she makes her first payment. Once she makes her first payment, you get advanced $900. Okay, now, but let's say Martha, okay, was only able to pay the first 3 months. So Martha was only able to pay the first 3 months because she had some other bills pop up and she had to cancel a policy. Martha was like, oh man, I have to, I can't make the payments, and then Martha cancels, right? Now, what happens to you, the agent? What happens here is, since she only was able to pay 3 months and you were advanced 9 months, that means that you have earned the first 3 months of her payments, which means you've earned the first $300, which means that's your $300 to keep. But you've earned that $300, but here's a big but. But now you are liable for the remaining. Okay. Now what's the remaining? The remaining is $600. You're liable for the remaining $600, right? So you earn $900. Martha paid the price for 3 months, and then Martha cancels. Boom. Now you're liable for the remaining $600, which means now you're liable for $900. Okay. So what happens is, from any future policy you write. So how will the insurance company get their money? Now you're like, okay, do they take the $600 from my bank account? Do I just automatically get a debit? No. Here's what they do. What happens is, from any future policy that you write from the insurance company, they will debit the $600. Example, okay? Let's say you sign John up. John signs up. You were supposed to get advanced $1,200 because John was paying, $175 or however much per month, and you were supposed to get $1,200. But you owe the insurance company $600 already. Okay, you following me? Let me know if you're lost. Are you following me? You following me? Okay, so you were supposed to get advanced $1,200, but John, from John's policy, but Martha canceled, so you owe them $600. So now, because of that, because you owe $600 to the insurance company, they'll deduct the $600 you owe them and only give you $600. Are you following? John cancels. So Martha cancels. You owe the insurance company $600. The policy from John was supposed to pay $1,200, but because Martha cancels, now you owe the remaining $600, right? So now, if you get in chargebacks, then it's only a matter of time before you are in big debt or your contract with the company is terminated. So how do you avoid this? First, let's address the data on Martha. Let's understand, why did the chargeback happen? Because here's the reality. Everyone's like, oh, chargebacks are no more than their business. No, they're not. Okay, it does happen. But if you're having chargebacks of 30 to 40%, there's a problem. Okay, the average chargeback should put you less than 7%, 5%. Why did Martha cancel, and why are people like Martha canceling? Okay, you have to understand. You have to understand what happened for you to be able to know how to fix it. All right, so let's address the data. Martha is a 72-year-old widowed woman, okay, living on $1,300 per month, Social Security. Her bills add up to $1,197, so she only has $103 left after she pays her bills. Okay, follow this. Martha's on Social Security. She's 72 years old. She pays her bills, cost her $1,197. She's only left with $100, $103 when she's done. Now, your policy that you sold her leaves her with only $3 after she pays it. How does she have $3 left? You sold her policy for $100 a month, which means after she pays it, from the $103 she has left, she only has $3 left. Do you see the flaw there? Do you see the problem here? So no room for error, and the insurance policy ends up being a burden. Okay, it just ends up being a burden to her. All right. Now, did you go wrong by selling her a policy? Absolutely not. No, you did not. Okay, but what if you sold her a policy for $27 per month? Now, if you sold a policy for $27 a month, well, for one, that won't be enough coverage. Okay, $27 per month will not offer her enough coverage. Okay, so if it won't get her enough coverage, then what's the point in signing for $27 a month? Plus $27 a month policy for 70-year-old is probably not even going to be able to cover the burial or anything, being genuinely honest with you, okay? And you wouldn't make any money. The truth is this. Most insurance agents like, well, I enjoy protecting the families. I enjoy seeing the smile on their faces. Listen, if you didn't get paid zero, most of you would not sell insurance if you didn't get paid anything. Most of you are selling insurance because outside of you being recruited in the insurance industry, you personally did not give a flying F. You did not care about insurance prior to you getting insurance. So for you to act like, oh, I'm not in the business to make money is completely naive, and you're completely lying to yourself. And I personally do not like it when people are not being upfront with me. Let's call it as it is. You want to make money in the insurance agents, in the insurance industry, or else you would not be in here. Okay? There's a reason why most people are always like, yeah, well, you know what, man, I do 100 grand a month selling insurance, right? It's not like, oh, we pay out how much debt claims per month. Why is that? Because the truth is this: you are in business to make money. You're a businessman. You're a businesswoman. You're a business owner. Let's stay in that, okay? And the reason why I'm talking about this is because a lot of people are like, well, I'm not in insurance to make money. Stop lying, okay? And you don't make any money. So the problem isn't Martha. Martha is not the problem here. Before you start going, Martha, well, Martha cancels. No, my problem is not Martha, all right? The problem is you are targeting customers on Social Security that only get them by whenever you buy or you generate a final expense lead. Because you're targeting seniors, they're retired, they're on Facebook, they are the ones responding to your lead form, and most of them are on a tight budget or they have a strong, significant health condition. Okay, that's why most people end up not seeing any results with final expense leads. So what's the remedy? Okay, you need to sell the clients that have substantial income coming in. So you need to go for the working class. Okay, I can tell you this from all the policies that I've written, I have zero chargebacks, zero from any of my working class clients. Now, mind you, it's also been more than a year and a half since I wrote a policy. So I'm just saying, but we generate leads. We've generated leads in the past, and we work with a lot of lead vendor. Also, a side note as well. I'm going to just do a little plug here, guys, before we continue. If you're looking for appointment setters to help you book your appointments, do me a favor. Go to www.riznresults.com. RIZNresults.com to go ahead and book an appointment to learn about how an appointment setter can help your business grow. Understood? So you need to go for the working class. Okay, I got to do a little plug-in. Oh, got that plug-in there. So you need to go for the working class. And the reason why you need to go for the working class is because they have money coming in. But here's the problem. They are not easy to find, okay? They don't respond. That's because most of the time they're working. The most common way to get in front of the working class is through mortgage protection leads. I mean, you can do a bunch of internet leads on, different search engine networks, Google, search engine platforms. You can launch ads on games. The different ways you can do, but you got to use mortgage protection leads. But they aren't easy to come by. So here's a strategy. Okay? Here's a strategy. It takes time. I'm going to tell you ahead of time. This takes time. This is completely different from what you see out there. And this does not involve you purchasing any lead from anywhere. But this is just a strategy that I want you to see. Try it out. Let me know if it works for you. But it's just, I can say, hey, go purchase leads from this lead vendor. Go. Here's the thing. There's a bunch of lead vendors out there. If you can get your hands on mortgage protection leads, 100% go get them. There's a platform called HOFleads.com. They sell mortgage protection leads. You can go ahead and purchase from them. Nashville Financial, they sell mortgage protection leads. You can purchase from them. But the strategy I want to recommend is a more authentic strategy and more organic strategy as well. This is an organic strategy, not really much more of a purchase strategy. But if done right, it'll put you ahead of other agents, okay? So here's how it works. One, I want you to get a list of all the mortgage protection brokers and realtors in your area. So all the brokers and the realtors, so people who are in the business of mortgages, okay? Brokers, realtors, whatever you want to do, right? And what I want you to do is I want you to go ahead and cold email. Most of you, if you've been watching this channel, I love cold email. I love cold email. It's like printing money. I love cold email, right? I want you to cold email them or cold call them. Now you're like, oh man, Emmanuel, I don't want a cold email. I want a cold call. Well, you can hire us. Go to RIZNresults.com right now and hire us to go ahead and do that for you. We'll go ahead and call the brokers for you. We'll call the businesses. That's fine. 100%. Okay. So I want you to cold email them or I want you to cold call them. All right. Now I want you to pitch them an offer of a partnership. Okay. Where they refer clients to you that they have either gotten a mortgage for or they sold a home to. Let's say, all right, I am a mortgage broker, lender, or I am a, a real estate agent, right? I'm currently probably one of the top. I'm doing about 40 deals a month, 40 deals a year. Or, if I'm selling loans, I'm probably selling maybe, 10, 15 loans a month. So if I'm doing 10, 15 loans a month, now I've already pretty much sold them on everything that I can sell them. What else is there, right? Now, what you want to do is insurance agents reach out to that person providing loans and say, hey, listen, you're not making money on the back end of the customer. So how about we do this? How about I come in, refer to me, I get them the mortgage protection. Okay, I go ahead and put the mortgage protection for the mortgage that you just got. I, look up whatever. I want you to understand. The insurance has very lucrative and very interesting commission guidelines. So go ahead and study how you structure the partnership as far as commission payouts would go, or if you're going to give it as a gift, just make sure to study the laws and know the code of conduct per the state that you're going to be doing this partnership in. That's just, I want to go ahead and put that disclaimer in there because, as you guys know, I 100% took the test as well. So I kind of understand what goes on there. So just understand, if you can or cannot pay them a commission, just go ahead and review that. Okay. I just want to go ahead and say that to you right now. But pitch them an offer of a partnership, whatever your clients to you that they have either gotten a mortgage for or sold a home to. The product you're selling them is mortgage protection. Okay. Also, here's a bonus tip. Right? Here's a bonus tip. Bonus tip. Get your health license. You're like, what? Get your health license. Here's why. Sell Medicare and Medicaid stuff. That's a better way for you to get in it's more lucrative than it's a fun expense, and it's a better way for you to get in the senior market. Okay, because if you get in the senior market, you have to understand something. Almost every time when Medicare enrollment season comes, guess what? People buying, right? And it's more of a better ability for you to get residual commissions. Most life insurance agents are not targeting the health space, but here's the thing. If done right, you can make more guaranteed and more consistent income from working health as you can work in life. I'm just going to be very straight up with you on that. Okay. So get your health license if you don't have a health license, and use that. Okay. It's a much, much, much better and easier way to target the senior market. The different tips out there, but this is just one of the tips I wanted to give, is to, if you're going to be targeting final expense, I would say this: get your health license and then use the health side to sell them first on the health, and then upsell the final expense. So this way, if they cannot afford the final expense side, you still got paid on the front end. Okay. So those are basically tips and nuggets, guys. Those are the secrets that I said I was going to reveal. And that's pretty much it. So just do me a favor, hit the like button. If you enjoyed the video, hit the subscribe button. And obviously, I will catch you on another video.